All right, I've got a super important video for you guys. It's not about the next hot stock, even though I do have a couple plays embedded in this video. It's about what's going to happen with the overall market going into 2024 and how has this Fed pivot or this Fed pause on interest rates really going to affect things moving forward. Now, I think that some of what I'm going to say today is going to be unwanted and unpopular because it goes against a narrative that we've been hearing. Oftentimes when you're talking about technical analysis or analysis in general, one of the most important parts of that is to define the time frame that you're talking about. Because when we say something's going to go up or something's going to go down, the real question is, when is it potentially going to do that? So far, the entire narrative regarding the Fed pivot is that it would be good for stocks and the market would climb higher. But when you go back into the past and you look at the real data, the fact is that doesn't necessarily play out. It plays out for a moment, but then there's also a huge risk of a massive decline, and I'm gonna break that down for you guys today. This is the Stocks with Josh show. Thank you for joining me. You know, I remember a video that I did back in February that said you missed the bottom. I actually felt at that time that it was the most critical video that I did in all of 2023, and this video feels similar to me. I want everybody to be prepared that I still think that we are going to be moving up. I don't think that all of the stocks have hit their peak highs just yet. Some may already have done that, but others are yet to do it. I'm going to define a couple big tech that I don't think have done that yet. But there's then going to come the concern of a massive decline. Like I said, the data bears it out. Guys, real quick, thank you for hitting the like. Hit the subscribe if you guys need videos like this explaining Wall Street and explaining these choppy markets. So, since the 1970s, there's been a total of 11 times where the Fed has raised or cut rates since the 1970s. And more than half of those times, the market, after he gave his initial cut, the market went down over 20%, which is a pretty significant drop. And so the odds actually don't favor the stock market going up when the Fed cuts his rates. Now we know the big reason why the Fed will cut rates is that the economy, slowing the economy. Remember, rate increases are sort of like the applying of the brakes. So when the economy gets slowed, he doesn't want to slow it down so much that we fall into a deep recession or deflation. He wants to keep the economy moving, just not as fast as it had been, which was creating inflation and other dynamics. So more than half the time, the market actually went down 20%. And so what it really was is a buy the rumor, sell the news. And so the rumor is that the Fed would cut. The news is that he has cut. And so the very biggest question that we've got to tackle at this point is, when is he potentially going to give his first cut, if that first cut could potentially trigger a move down in stocks? Well, people have said that it could potentially be as early as March. Then the next question is, okay, well, what will happen in the market between now and March? Potentially, that's the opportunity where the market could hit all-time highs. One of the dynamics I'm going to look at right now is we know that big tech has pulled up from its bottoms and is at the top of its range, and some big tech has been making 52-week highs right now. But we know that there has not been a lot of breadth of participation with the rest of the stock market. That's why it's been referred to as the Magnificent Seven or the Magnificent Eight, just a handful of companies that have pulled the S&P higher. Well, one of the dynamics that we're going to be looking for over the next 2 to 3 months before this pivotal March potential rate cut is for small caps to potentially join those large caps while the large caps slowly digest the big move up before the potential pullback that could occur in March. So I want to make it clear, 4 out of the times that the Fed cut rates, the market suffered minor weakness and overall ran up for the next 6 months. And that's at the point in which he cut. So most of the time when he cut rates, the market actually declined. 4 out of the times that he cut rates, it actually declined a little bit, but then largely moved up over the next 6 months. So overall, out of all of the scenarios, when you average the decline over all of the times that he cut rates, the average was that the market moved down 20%, followed by a 6-month move up of around 3%. And so To be very clear, we could be looking at a 20% pullback minimum in the market if we simply went by the averages that would then, over the course of 6 months, which would largely be putting us into potentially Q3, Q4 of 2024, we could then begin to see a minor 3 to 4% increase in the S&P 500. So today I'm going to be looking at the SPY. I'm also going to be talking about the SQQQ, because whenever we talk about the markets going down, everybody's like, okay, Josh, should I load up on the SQQQ right now? And I'm going to give you guys a bonus play at the very end. And I'm going to review with you guys the Santa rally, because that's going to be one of the other big questions I get. Josh, are we going to get a Santa rally? Or aren't we going to get a Santa rally? It's not so much are we or aren't we, because some could argue that we already have, but there's a pretty broad view as to what the time frame for the Santa rally is. I'm going to remind you guys of what the Santa rally time frame really is and why the market tends to go up during that time. But let me just quickly take a station break for the MooMoo investment app. If you're a new trader and you're trying to get your trading in order going into 2024, you may need a better trade platform. Check out the offer from the MooMoo investment app. These guys are a zero cost to trade platform available in the US, Australia, and Canada. But the offer is different for each country. So click on the link in the top pinned comment to see the offer that's available for you guys. Now, here in the United States, they're giving away up to 15 free stock. But the best thing that they're offering right now is an APY of 5.1% to just earn you money while your cash sits on the sideline and you save going into 2024. Check out that offer for yourself. All right, the very first place I want to start is with the S&P 500's trailing average PE ratio, right? Now that's an important metrics. On average, when the Fed cut interest rates and the PE of the market was at 18, that's when it got a negative 20% decline each and every time. Now, the other scenarios that I had mentioned to you where he had cut interest rates and there was another 4 times or 40% of the time, depending on how you look at it all, where the markets didn't go down that much, it was at that time that when he cut interest rates, that the PE of the S&P 500 was on average 11.4. When that happened, it returned a negative 10% in the first couple months. Now, the big question that a lot of you guys should be asking yourself is, okay, if it dropped 10% on an 11 PE and it dropped 20% on an 18 PE, well, what's the PE average right now for the S&P 500? Well, it's 26.2. It's significantly higher than all the other times when he went to cut. This has been one of the strange dynamics because the market's been doing pretty well, earnings have been coming out pretty well, and stock prices have been moving up against the trend. And so right now we're moving into an environment where he is potentially going to cut rates because he's achieving his inflation goals. Inflation has come down in the way that it should, but unemployment didn't spike, and we didn't see massive decrease in GDP and other metrics. So what could happen right now is we may see that data come out in time. And here's the thing. If by the time the Fed cuts interest rates and we're sitting at a 26.2 PE, then if you just do some general math in your head, we could be looking at a much bigger pullback than the average 20% pullback. We could be looking at a 30% pullback. One of the very next questions that you might ask is, Josh, what was the worst case scenario when the Fed cut rates? Well, the market's seen over a 50% pullback. And so the bottom line is the average has been a negative 20, but it never did the market have such a high PE for the S&P at the time when the Fed started cutting those rates. So I can hear people asking right now, Josh, are you telling us that we should unload and sell all of big tech right now and load up on the SQQQ to make big bucks in 2024? Well, like I said, it's all about timing, and I don't think that the market is hit as high as it's going to go because right now it's sort of a Goldilocks environment where we're getting everything that we want. We want a dovish Fed, we're getting a dovish Fed. We want lower interest rates, we're getting lower interest rates. We want higher corporate earnings, we're getting higher corporate earnings, and that's why the stock market is as expensive as it is right now. And the time frame that the Fed potentially might cut is March. And so we've got a handful of months before that decision actually gets made. And what I've seen so far is that the bears who've looked at the scenario that I've described for you today have taken a bearish position too soon. They're on life support right now, just barely trying to hold on, hoping these markets will turn around and go south, but I don't think that they're ready to do that. And so now it's a good time for us to look at some basic technicals on the SPY, because we're going to be watching the SPY to see if these markets are going to be going higher or lower. And I think we're right at a point of decision. We're either going to get that further breakout or we're going to break down, because we did have a big move up this last week. And so I'm going to be watching 473, a close above 473, to see us shoot all the way as high as 490. And yes, that's absolutely possible. But if in the course of the next couple of days we break down beneath 468, which I consider support, I think that's when I would enter puts to go short, and I think we would quickly go all the way back to 455. So the SPY, largely from a technical standpoint, is really neutral. It's about 60% bullish and about 40% bearish. And so going into this week, it really could tip either way. We don't have clear direction on the SPY right now. I see it as going to continue to be choppy as the bulls and the bears attempt to fight it out. But here's where I wanted to allude to you guys, some of the big tech stocks which have really not taken off like a rocket just yet. One of them is Google, and so I think there's absolutely room for a breakout move up on Google, and there's still room for a breakout move up on Amazon. But take these cautions. Just because we move up, what's most important for you to understand is at this point in the game, when everything is at its peak, where all these big tech stocks have come up from 2022 lows, you want to consider the fact that we're going to see more violent swings. Every time Amazon has come up to touch the top of its range, it's done a quick touch, and then it's been a hard sell-off of profit taking, only for it to turn around, rebound, and go even higher. So be aware that you need to be using your stop losses. I think Google and Amazon still have room up, but that room up could quickly fade once we hit some key technical levels. Now, the next question I wanted to cover is there going to be a Santa Claus rally? And every year I come out and I remind you guys of what a real Santa Claus rally is, because around this time of year, you hear it on CNBC, and other market commentators will begin to use the term Santa Claus rally on December 1st. And they'll talk about it going on all through the month of December. But the fact is that a true Santa Claus rally, by definition, from a technical standpoint, is actually just the 5 last days of December and the first 2 days of January. That's the time frame in which the idea of a Santa Claus rally has often been realized. And the dynamics that go into that is simply the fact that their volume of trading is lower, and the market tends to just float up during that lower volume trading period, people beginning to take small positions going into 2024 in that time frame. And so just realize that it's a small window, smaller window than most people realize. All right, what about the SQQQ? Okay, the SQQQ is going to turn out to be a really good play at some point, but you don't want to get into it too early. And in particular, one of the best ways that I've enjoyed playing the SQQQ is by actually doing calls on the SQQQ. Now, when the NASDAQ, which is measured by the QQQ, when it goes down, the SQQQ is a leverage 3x inverse position that goes up. And so if you're not into trading options, this is one of the good choices to hedge your long-term positions. That's not the way most people use it. Most people do not understand that the SQQQ is not a buy and hold strategy, because it loses value very quickly over time. The math works against you. And so timing is extremely important. Where do I see support and resistance on the SQQQ? I see support at $14.40. I see resistance above at $16.18. But here's the more critical level. If we're going to continue to go up, which I think we will, a critical level of support is at $13.80. Now that's a breakdown watch zone. If we close on the daily candlestick chart below $13.80, it means that we could be having a technical breakdown all the way down to $11 or $12. Now, if I think the market's going to continue to go up through December and even into January, and that we're not at the point when the market's really going to go down, because we got to get closer to March when the Fed's actually going to put a rate cut into the system, then we want to give the SQQQ some real time to continue to come down. So I'm going to be watching that 1380 to see if it breaks down. And then when and if it gets down to $11, that's when I'm going to be looking to take a reversal position with elevated stocks and attempt to ride the SQQQ up when the market does eventually pull back based on the data, the historical data that I've given you guys today. So in addition to that, some of the bonus things I wanted to share with you guys today, some other things I'm watching in particular that I alluded to at the beginning of the video is the Russell 2000 small cap stocks measured by the TNA. That's an ETF similar to like the Qs are. It tracks the Russell stocks and it's a 3x going long. And I think there's opportunity for the small cap stocks to begin to catch up with the large cap stocks. And so I think that we are going up from here on the TNA. But again, you want to be careful because it's already come up a little bit. There's no guarantee if you buy in on Monday that it's going to continue to go up from there. I'm going to be watching these levels. Support currently for TNA is at $35 and then at $32. And it is possible that if the market wanted to pull back a little bit and digest some of the current run-up that's experienced, that we could come back and retest the $28 to $27 level for TNA. Now, I would be excited because I think that this is really yet to break out, and it's going to break out, and I have a target ahead of it reaching $48, and so I think there's a nice amount of room on any pullback for it to go higher. Now, the other scenario that I'm going to present to you guys is if by the end of next week we close above 37, which has currently been resistance, I think that's our confirmation that we're going to get there high all the way to $48 sooner than later on the TNA. So I'm going to be watching the 36 level very carefully Monday to see if we have any bearish trend beginning. And if we can continue to hold above that level between 36 and then 37 going into the end of the week, I'm going to get pretty bullish on this particular ETF, which is long the small cap stocks. I will throw out to you guys that if everything I've shared with you plays out the way that I think it might, when we eventually hit 48 on the TNA, I could expect a pullback to hit small caps pretty hard, which could then bring the TNA in Q2 of 2024 potentially all the way down to $14. But I don't want to get ahead of myself. That's just sort of a broad stroke view of small cap stocks between now and the middle of next year. Now, the last stock I'm going to talk to you guys about is my small cap pick of the week, and I'm not going to dive into it much today. It's called Wish. And we're wishing that this small cap has got some more room to the upside. I gave the technicals, the breakdown, and the explanation in the Discord. If you don't know what the Discord is, that's the Stock Squad Patreon, where myself, Stock Up with Larry Jones, Keenan Grace, and Stockmo have a community. You access it through the Patreon, and you get all the content over on the Discord where we're talking about stocks and technicals and trades and connecting with you guys more there. Check it out for yourself. There's also a link for that in the top pinned comment. Guys, thank you for joining me today. I've got some interesting crypto videos ahead in the next couple days. Look forward to sharing those with you. Peace and blessings. Hit that subscribe button to make sure you get the follow-up content. Take care. We'll talk to you soon.